trading options sometimes feels more like a game of emotions and a game of self-control rather than analytical thinking and risk management. So this week, that's going to be the kind of theme that I'm talking about while I go over my trades I made this week. First off, here are my daily close snapshots. You can see Monday started off positive, all was well in the world. And then the rest of the week, again, my portfolio is tanking. And this is mostly because I have too big of plays on China. So Baba and Wish is no secret. I'm pretty much caught in those right now. And basically lost 4 digits every day and then only 3 on Friday. I guess that's a slight improvement, right? Progress report this week, my portfolio is down another $4,700. My September realized premium was negative, so that's 2 negative months in a row. And that's the first time I actually had some negative months. And then October, I'm currently positive in realized income because I was able to close a Netflix play today. It was about to expire. But we already know that I have some Wish puts that would be expiring at a negative, and then I have some Baba plays that will be negative. So there's a lot of negative realized premium coming up this month. So we might have 3 negative months in a row. Let's see if we can combat that. Now that I look back over time, so I've been with Interactive Brokers since July 8th of 2020. And you can see I've done pretty well, but we've had 2 major big dips here. Now the first one, this was back in April. There was an IV expansion, and this one didn't really worry me too much because none of my positions were actually being challenged. Like I was spread out, I was pretty safe. I think at that time I was playing 20 deltas on my plays. I wasn't doing any directional plays like zebras. So I just had to wait for stuff to come back out, and most of my stuff just expired worthless, and you can see like the dip came right back up pretty instantly. But this dip, on the other hand, this is because I put too large of my position on some Chinese stocks. You got Baba and Wish, and I doubled down pretty early, so it's just kind of set up that snowball effect, and that's where this is coming from. What's different about this time is the plays that are causing me losses I'm not so sure are that good to keep on. So like Alibaba, I think long term that stock's gonna go up, and if you buy Baba now, you'll be fine. But I have zebras, and those expire in 21 days. I'm not so certain that there'd be a short term bounce to get out of those. So I'm kind of trying to decide what to do with this Baba position. I mean, I have 21 days left on those contracts. So right now I'm just gonna wait out next week, see if we get a little positive news or something, see if we get more information, but I may just close this out for a loss and just be done with Baba for a while. Or I may roll those out again, but I don't know. Like I'm thinking it might be time to cut my losses on the Baba play. Maybe sell my zebras and then buy shares to just hold long term. I'll probably never come back to break even on Baba like anytime soon, even if I go that approach. But at this point, I think it's just a matter of limiting losses from this position. This long dip here has brought my year to date down to 25%. I think at one point it was at like 60% for the year, so that was pretty nice. Since inception, this was over 100%, and now it's down. So this week's trades, the first 3 should not be a surprise. I put those in a video that came out on Sunday, I think it was, and I talked about these 3 plays all together, so I'm kind of skip over these. These should be small wins for my portfolio. They're not going to make me a lot of money, but those small gainers add up over time. In that video, Alternative Investments commented and talked about the X stock. I looked at the chart, I liked it, so I did throw on a bunch of put spreads on it, and those go out till November. I put on 10 of those at 20 cents, so that's $200 in my pocket if X stays above 19, and we'll see how that one plays out. On Monday, I also closed out my CCL put. I was able to close out for $5 and collect 75. My Tesla bear call I put on next week. Well, Tesla shot up from 760 to 785, so this was actually completely breached. And I decided, you know what, let's just take this off, because my max risk on this was $1,000. I was able to get out with a $100 loss, essentially. So I decided to just bow out of that one. So basically, I gave back the Tesla profit I made the previous week. It looks like we had a Newsy dividend probably last week that dripped in today, so that's pretty cool. Bought 3 more shares. No matter how I perform, at least Newsy is still making me a little money every month. On Wednesday, I ended up selling I bought 4 Netflix bear calls. So I sold the 620 call, bought the 625 call, Collected $112 for each of those, so that's $448 in my pocket. This is a short-term contract. It expires next week. And I put that on because I was feeling pretty good about the previous Netflix bear call that I put on. And Netflix jumped up to 603 when I put this on. So it's like, oh, let's get that increased premium again. And go for that quick theta burn. Look for me to close this out on Monday or Tuesday on a Netflix dip. I think Netflix closed Friday at like 608, which is a little higher than I would like it. So if it dips on Monday or Tuesday, I might pull out quickly because 1 week is not that much time for stuff to move back in my favor. These Ford puts, I decided to close them because it's only $2 to close them and lock in that gain. Thank you, Ford. I know, $15 that, that'll buy lunch. And then here's the Netflix play. I put this on back in the beginning of September. So I had a lot of premium in this to begin with, and I was able to close it out at $10 a spread. And I did this back when Netflix dropped down to just under 600 this morning. So I didn't have to worry about it the rest of the day. It cost me $50 to lock in $8.25. Looks like I could have just let it expire worthless, but I don't like to let contracts expire worthless in case Netflix goes up in the aftermarket. Don't want to worry about pin risk, so I always close my spreads when possible. So that's the big winner of the week is a Netflix bear call. Nothing else was set to expire, so my realized gain was $808.28. And then here's this view from my logs. I put the positions I closed this week at the top. And what's neat about this is you can see when I put those trades on and see how long I actually held them. So like that Netflix play, that was in my books for 24 days for me to collect that 800 and whatever dollars it was. And then here's all the new plays at the bottom. You can see the premium I collected from putting these trades on. Alright, so here's my current positions. I'm seeing a lot more red than green recently. Next week, I have some Wish 11 puts that expire. So you'll see me roll those next week, unless Wish decides to shoot up and save me that trouble. And then I also have that Netflix bear call that expires next week. And tomorrow, I'm actually having a video release that talks all about the bear call. So if you're not familiar with what that is, watch that video tomorrow. It'll drop at 8 Central in the morning. And I think I did a pretty good job on it. Let me know if you like the format of that video, because I was trying some different things. And leave a comment in it and let me know. Thank you for watching, guys, and better luck next week.